Hi traders, this is Chris from Elite Currency with a video on trends and trend lines. It's actually going to be a series of webinars on this topic. First of all, though, be aware that trading for exchange and financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only. And by continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Please pause the video to take a look at this, and also at the link below, of course, elitecurrency.com/risk disclaimer for more information. Alright, just a quick introduction about Nennet and myself. We are both Forex traders, and we also give analysis and content via Admiral Markets and occasionally at FX Street and Forex Factory. Alright, trends are pretty simple, although are they really that easy? That's of course the big question. It seems very easy at first glance. And the very first thing that beginning and aspiring traders do here from other more experienced traders is probably focus on trading with the trend. All right, now determining a trend at the beginning sounds pretty simple, but actually requires a lot of attention. And the trading philosophy, the trend is your friend until it bends, is of course, says it all, and it's a very smart thing, but to buy on dips, for instance, and sell on rallies, it's a very, in its core, a very good message. But of course, there are a lot of practical aspects that we bump into when trying to apply that in real life trading. First of all, what is the real trend? Depending on which time frames you look at and which time frames should you incorporate, there could be big differences. At what point will the trend continue? How long will it continue? And when should I expect a shallow or deeper pullback? So there's a lot of things to be reviewed before one is getting a bit better in trend definition. Often enough, actually, there's a bit of the curse of beginner's luck. Traders often hit a winning streak, and when they start out, and most of the time the success is generated by a big trend, but they're not really aware of the trend. So they think that trading is just jumping in a trade and it will go our way, and that's kind of the beginner's luck curse. It's probably just a trend that is really manifesting very nicely, and the trader just doesn't realize it. And of course, when the reversal or the range then starts, they don't have the experience or knowledge to recognize that, and all of the profits made in the trending environment are then lost in the range or reversal. And you can see, for instance, with the euro-dollar upside, this is the monthly chart, that a lot of traders probably make good profit with the trend to the upside, but a lot of traders probably lost a lot when the ugly turn happened and we got pretty good consolidation zones in the years after this, right? Since 2008, a lot of the downside and reversals. So there were a lot of traders probably trapped in that and didn't realize that. So anyhow, once you understand the importance of trends, we can move on and look at what are the correct time frames. Well, there's not just one time frame that's correct. It really depends how you trade. Depending also on what entry chart you use, I recommend I use for my own trading, 1 and or 2 time frames higher than the entry. So pause this video to take a look what I use for the charts that range from 5 to daily. Now I have to admit, I typically use 15, 1 or 4 hour the most. Sometimes I do occasionally use a 5 or daily chart as well. So these are then the charts I use for the trend. In the case of a 4-hour chart, I would use day and weekly charts. All right. Now there are a lot of ways to define the trend, and obviously the classical method is a very good one. And with classical method, I mean looking for a series of higher highs and higher lows for an uptrend, and a series of lower lows and lower highs for a downtrend. And this is, of course, as old as I can get in the world of trading, but still very useful, very practical, and just a very good way of understanding market structure. Okay, very classical but solid approach when analyzing the markets. Now, basically when the trend ends, we will see a lack of an extreme, a high or low, and often we'll see a lower high or a higher low. So just to put that with schematics, like this, we will see higher highs and higher lows, and of course this is an uptrend. And the first time this uptrend kind of has some moment of weakness is where we have a lower high. All right, that is the first moment of weakness. So that could be already an indication of problems. Obviously, if you then also get a lower low, that could be a reversal. Or if you get, in this case, a higher low, but also a lower high at the same time, which means basically the price is staying like this, there could be a range or a triangle being built. That could be a consolidation zone for a reversal or a trend continuation. So you can see here on this chart, for instance, the red arrows indicating the downtrend here, for instance, and here, and the green arrows an uptrend, and the purple boxes indicating a range zone. All right. So that would be a classical example of how you could use this simple principle to understand that. The fractal indicator, which was discussed last week, is helping me a lot with spotting those sequences. And these fractals just make it very visually appealing to see the chart and understand what the direction is of the trend and the flow. Because I can just look at the fractals and easily glance over the chart and have a feel for it. I don't have to squeeze my eyes and start hunting for tops and bottoms. So that's why I like fractals so much. Now I use the trend often. I love trading with the trend, and I did that with Admiral Markets webinars as well this week. admiralmarkets.com, and you will find the webinars. You can register by going to Education and clicking on Webinars. This was one of them. The pound CAD on Wednesday closed for plus 90 pips, and I used moving averages for that, as you can see, to identify the uptrend and waited for a pullback. The euro odd, same thing. Uptrend, look at the moving averages, pullback, and got 74 pips when it continued to the upside. That was an example from Tuesday. So classical higher highs and higher lows, lower lows and lower highs is just a very simple method, of course. It's the classical method, but needs to be discussed. I can see that this video is already taking 7 minutes, so we're going to wrap it up here. We're going to continue very soon, though, with defining the trend and dive into more details and more advanced concepts, of course, basically when looking at trends, looking at trend channels, moving averages, fractals versus moving averages, candle highs and lows. And we're going to also look at trend lines and have an exhaustive series on that as well. So there's a lot of good stuff coming up. And if you're interested in trading with Admiral Markets, take a look at our link and we'll give you a course for free when you sign up. Just send us an email once you've signed up and we'll send you the moving average course for free. All right, thank you so much for joining. Wish you all a great day. Cheers.